Many foreign investors say Australia's property market is defying gravity, having avoided the collapse in prices experienced by much of the developed world. But in its latest snapshot of the property market, research group BIS Shrapnel discounts bubble trouble. It's forecasting modest growth over the next 3 years for the mining states and New South Wales, with others going backwards. Here's Philip Lasker.
At 545,000 twice.
There are few things that play on the national feel-good factor more than the price of property.
Look, we think we're in for a period of a return to some growth in those markets that are significantly undersupplied.
Good news for some capital cities where prices are forecast to rise at reasonable rates above inflation over the 3 years to mid-2015. The mining boom will help Perth, Brisbane and Darwin bounce back. Sydney will be boosted by a chronic housing shortage and previously stagnating prices. But it's all very moderate.
We've probably seen the end of those boom years that we've seen over the past decade with really strong asset appreciation. You won't get that again.
Second call, 580.
BIS Shrapnel says prices will rise less than the inflation rate in the southern capitals and Canberra over the next 3 years. Adelaide and Hobart will be hurt by a lack of population growth. Melbourne is a victim of a recent pickup in prices and oversupply, as is Canberra. But the optimists have faith in the power of lower interest rates.
Look, I've been watching the building industry and property market for 30 years and I've never seen a time where people don't respond to falling interest rates.
Except that there are forces like Europe's debt problems acting in the opposite direction, encouraging saving.
If people don't have the confidence to go and spend, a couple of $100s in a retail store, their propensity to go and spend $400,000, $500,000, $600,000 on a home is going to be a lot less as well.
And last week's numbers, showing a thumping 12% fall in housing starts during the March quarter, suggested the lack of confidence isn't confined to buyers, but builders as well.
That really comes back to the global economy and people being quite nervous, and it'll take a bit more, some time before we get some of that confidence back and we see the lower interest rates starting to kick in.
And I think you'll see a flow through to demand not only from first home buyers but also increasingly from upgraders 6 to 9 months out. It'll differ across the cities, of course, and also investors, particularly when investors see at least a return to modest price growth.
Unless events in Europe move beyond the trauma already expected.